Most people see a sign for a card that gives back cash or miles and think it is a kind of gift. The truth is more interesting. Credit card rewards are not random generosity. They are part of a quiet financial system in which banks, merchants, and customers each play a role. Understanding that system once changes how you see every reward you ever earn. At its core, every credit card purchase involves a few players. There is the customer, who taps the card. There is the merchant, who receives the payment. There is the bank that issued the card. There is also a network that connects everyone in the background. Each time you swipe, money moves through this network, and a small fee called interchange flows from the merchant. That small fee is the secret behind most rewards. The merchant pays a percentage of every sale to keep the payment system running. The bank that issued the card receives a slice of that fee. To attract customers and convince them to swipe often, the bank shares a portion of that slice back with you, in the form of cashback, points, or miles. A useful metaphor is a quiet river. The river is the merchant fee paid on every sale. The bank stands at a bend in the river and diverts a small channel into a customer pond. That pond fills as you spend. You see it as rewards. The merchant sees it as part of the cost of accepting cards. The bank sees it as a way to earn your loyalty. There are several common reward types. Cash back returns a percentage of your spending in actual money. Points are flexible units you can redeem for travel, gift cards, or statement credit. Miles are usually tied to airlines and partner programs. These categories overlap, and many cards mix them. But underneath, they are different shapes of the same diverted river. A common mistake is treating rewards as bonus income that justifies new spending. The math rarely works. If a card returns a few percent on purchases, you would have to spend a lot to even reach the value of a single annual fee. People who buy things they would not otherwise buy in order to chase rewards almost always end up worse off than if they had simply spent less. There is a hidden risk in card rewards. Interest charged on unpaid balances is dramatically higher than the percentage you earn back. A single month of carrying a balance can erase years of rewards. Cards are profitable for banks largely because many users carry debt at high rates. Rewards only work in your favor when balances are paid in full every single statement. A better mental model is to think of rewards as a small built-in discount on purchases you would already make. A few percent off groceries, gas, dining, or travel, applied automatically through a card you use responsibly, can add up over a year. But it is a discount, not income. It quietly reduces costs. It does not create wealth on its own. Sign-up bonuses deserve special attention. Many cards offer a large lump of points or cash for spending a certain amount within the first few months. These bonuses can be valuable, but only if the required spending is something you would have done anyway. Pushing yourself to overspend to hit a bonus quickly turns a marketing trap into a real financial loss. Annual fees create another layer to consider. Premium cards often have higher fees in exchange for larger reward rates and travel perks. The right question is not whether the fee is high or low, but whether the benefits you will actually use outweigh the fee. For many people, a no-fee card with simple cashback is quietly more valuable than a fancier card they never fully use. A common misunderstanding is that more cards mean more rewards. While strategic card combinations can earn more, every additional card adds complexity. More due dates, more accounts to track, more places to forget a payment. For most beginners, one or two well-chosen cards used consistently outperform a chaotic wallet full of overlapping cards barely understood. The psychology of rewards can quietly distort decisions. Studies show people tend to spend more freely when paying with cards that offer rewards, even when they are not chasing a specific goal. The pleasant feeling of earning a reward can mask the larger reality of spending more. Awareness of this effect alone can change long-term behavior in your favor. A practical rule for rewards is to pick a card whose categories match where you naturally spend the most. Someone who drives often may benefit from gas rewards. A frequent diner may prefer dining categories. A travel-heavy life may benefit from travel points. Matching the card to your existing life captures the most benefit with the least change to your behavior. What to avoid is over-optimizing your reward strategy at the cost of your real life. Spending hours calculating perfect category combinations might save a small amount over a year. The same hours spent on raising your income, reducing fees, or fixing a savings habit usually save much more. Rewards should be a quiet bonus, not the center of your financial attention. A better habit is to use your reward card the same way you would use cash, fully paying the balance every month and resisting the temptation to let the card change your spending. Treat rewards as a small refund on intentional purchases. Once a year, review whether your card still fits your habits. If it stops fitting, calmly switch. Over the long term, the difference between people who use rewards well and people who lose money to them is rarely about cleverness. It is about discipline. The disciplined user pays in full, uses one or two simple cards aligned with real spending, and quietly enjoys a small built-in discount over decades. The reward system is fine. The challenge is the user behind it. To summarize, credit card rewards are funded by merchant fees, shared by banks to win your loyalty, and only valuable when you pay your balance in full and avoid spending more than you would have. Treat them as a quiet discount, not a winning game. Choose cards that fit your real life rather than your aspirations. Reward programs are designed by smart teams with one goal: to encourage you to spend more. Understanding that fact does not make rewards bad. It simply puts you back in charge of how you use them. The final takeaway is calming. Rewards are real, but small. They will not change your life on their own. The habits behind them, however, can. A patient, disciplined approach to credit cards turns a small reward into a long, steady drip into your favor. The drip is gentle. Time, as always, is what makes it meaningful in the background. The biggest reward for most people is never the points or cashback, but the long, clean credit history they build by paying every balance in full and on time, year after quiet year. Lenders quietly notice that long pattern, and over decades it tends to translate into lower rates on bigger loans, where the real money is made.